If I ask you, what makes a movie super hit? Is it just the actors? No, it is a teamwork, including directors, scriptwriters, producers, and many more people. However, we generally give credits to actors. If we apply the same analogy in the business, when you buy your favorite car, have you thought who manufactures the components of that car? Today, I'm going to cover the fundamentals of a company that manufactures some of the very critical components for automobile sector all over the world, including the chassis components, engine components, etc. In fact, this company is not just present in auto sector. It has also diversified into other sectors including e-mobility, power, oil and gas, mining, defense, aerospace, etc. And there is going to be huge demand from each of these sectors. And being a mid-cap company, it is expected to grow multifold times in the future. Well, company name is Bharat Forge. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Today we will cover Bharat Forge business, promoter and leadership, future growth prospect, key risk and competitor, and finally we'll cover the financials along with valuation. But before we proceed, let me clarify that this video is only for educational purpose. If you want to learn in depth about fundamental analysis along with other aspects of money management, you can explore my online course. Alright, let's get started. Incorporated in 1961, Bharat Forge, a part of Kalyani Group, is the largest forging company not only in India but also the largest forging company in the world. That itself speaks everything about the company, isn't it? So forging is basically a process where you give shape to a metal, and these metal products are used in every single industry. In fact, just a car itself has hundreds of such metal components. If you are a mechanical engineer, you would be able to relate to it. Anyways, let's not get into the technicals. So Bharat Forge business is mainly divided into two areas: automotive segment and industrial segment. Automotive segment is further divided into passenger vehicle and commercial vehicle, where it manufactures engine parts like your crankshaft, connecting rod, fuel injection system, then chassis parts like your front axle beam, steering knuckle, then transmission components, etc. Bharat Forge is the largest exporter of auto components from India and one of the leading chassis component manufacturer in the world, with top tier clients including the Daimler Group, which is the parent company of Mercedes-Benz, Volkswagen Group, which is the parent company of Audi, Bentley, Porsche, Bugatti, and many popular cars. Then, its industrial segment includes various sectors including power, where it manufactures critical components for both conventional and renewable energy sector, then components for oil and gas sector, railway sector, marine sector, construction sector, and so on. Earlier, Bharat Forge had majority of business from automotive segment. However, company has now diversified into industrial sector, and within this, company is also catering to aerospace sector. Until last year, aerospace had just 2% contribution in the business, but today it contributes nearly 10% in the industrial segment. Overall, if you look at the revenue breakup in FY22, 57% revenue is from automotive segment and 43% from industrial segment. Within automobile, 42% is from commercial vehicle and 15% is from passenger vehicle. If you look at the business breakup by geography, in FY22, 37% revenue is from India, 43% from North America, 18% from Europe, and remaining 2% from others. Bharat Forge has a total of 15 manufacturing facilities, 8 in India, 5 in Europe, and 2 in US. This helps them work closely with the customer in each of these regions. Now, if you look at the promoter and leadership of the company, Mr. B. N. Kalyani is the chairman and MD of the company. He is the person who made Bharat Forge the global leader in its sector. He has done mechanical engineering from BITS Pilani in 1970 and has done his masters from the most prestigious technical institute in the world, MIT. He has been leading the company since 1972, so he has 50 years of experience in the sector. That's simply exceptional. He has a son, Mr. Amit Kalyani, who is the deputy MD of the company. He holds a BE degree in mechanical engineering from Bucknell University, Pennsylvania, and he is also a Harvard Business School OPM graduate. Mr. Amit is associated with Bharat Forge since 1999, so again has a rich experience. Overall, Bharat Forge has a very strong business profile with global leadership and has a very experienced and competent leadership. Now let us try to understand the future growth prospect of the company. If you look at the future growth prospects, one of the biggest growth driver for Bharat Forge is the defense and electric vehicle initiatives. Bharat Forge has a 49% stake in a subsidiary with name Torque Motor that has successfully launched e-motorbike with name Kratos. Currently, it has received 2,000 orders and in testing phase. So Bharat Forge is betting on the EV revolution with its own electric bike. Moreover, Bharat Forge was also selected under government PLI scheme for advanced automotive technology products. Company has also won orders for developing components for electric commercial vehicle in the light truck segment. For FY23, company is planning to launch a suite of product and subsystem for EV application. Bharat Forge has consolidated all e-mobility solution under a single entity called Kalyani Powertrain Limited. Bharat Forge is also getting good traction from defense and aerospace sector. Company has been a supplier of critical components to Indian defense sector and global aerospace sector. But the recent move from Indian government to focus on indigenous domestic manufacturer for defense and aerospace sector has opened huge opportunities for Bharat Forge. Company has successfully productionized and shipped Kalyani M4 armored vehicle to Indian Army for UN peacekeeping mission. Company has also added new products in aerospace sector. Bharat Forge is working towards consolidating all initiative in these business under its 100% subsidiary Kalyani Strategic System Limited. Bharat Forge has also started a new greenfield facility in US to cater to aluminum forging requirement for global customers. The facility has recently started in FY23 and currently running at low utilization level and also resulting in lower profitability for the company as it is the first year of operation. Going forward, once this facility start contributing positively, it will add more to the company's top line as well as bottom line. Bharat Forge has also made a new acquisition last year. It acquired JS Autocast company for 490 crore rupees that primarily operates in industrial casting space. This will strengthen Bharat Forge capability in industrial segment and would untap market across sectors like wind energy, hydraulics, construction, mining, etc. Overall, there is immense growth opportunity for Bharat Forge in EV segment, defense and aerospace sector, as well as industrial sector, including your green energy space, construction sector, etc. in both India as well as globally. On top of that, there is strong recovery in auto sector that has struggled in the last few years. But it seems the situation is improving. So that would also be a positive development for Bharat Forge. Now, if you look at the key risk, number one risk is high input cost. Input cost has been a big challenge for the company due to rising metal prices and gas prices. Although there is a fall in metal prices, but gas prices are still high. High gas prices has severely impacted the European business, and it would continue to be a key risk in terms of impacting the profitability of the company. Then second risk is supply chain constraint. In the recent past, auto sector has faced multiple challenges due to supply chain disruption during COVID and then during Russia-Ukraine war. As a result, there was a huge shortage of semiconductor. Although the situation has improved, but any disruption on the global supply chain can impact the demand from end industry for Bharat Forge, especially the auto sector. Also, the fact that Bharat Forge generates a good revenue from US and Europe that contributed 55% in total revenue last year. And there are chances of recession or rather slowdown in US and Europe that could impact the business of the company in the short term. If you look at the competitors of Bharat Forge, it includes Sona BLW Precision Forging, Mahindra CIE Automotive and Ramakrishna Forging. Now let us look at the financials of the company. If you look at the revenue of Bharat Forge, its revenues have grown from 6,400 crore in FY17 to 8,300 crore, then 10,100 crore in FY19. Although due to COVID, its revenue fell down to 8,000 crore and then to 6,300 crore. However, once the economy opened up, revenue jumped to 10,400 crore and latest revenue is 11,200 crore. Next, if we look at the Bharat Forge profitability, it was 711 crore in FY17, then jumped to 754 and then 1,033, and then due to COVID, the profitability fell down to 349 crore and then minus 127. However, look at this. Once the economy opened up, profit jumped to 1,077 crore and latest trailing 12-month profit is 1,085 crore. One of the reasons why profit has not grown much in trailing 12 months is because company has recently invested in its US facility that has opened up and it is running at low utilization level. And due to that, it is actually in loss currently. Once that facility start running in full swing, it would start contributing in the profitability of the company. Next, if you look at the margins of the company, it is more or less consistent 18%, 21, 20, although it fell down during COVID, but latest margins are 19 and 18%. Interestingly, if you see, even after increase in input price in terms of raw material and gas prices, company has been able to sustain its margin that shows the inherent strength in the business of the company. Next, if you look at the ROE and ROCE, it was well in the range of 16-18% during pre-COVID, and then of course it fell down during COVID. And in FY22, if you see, ROE stood at 16.4% and ROCE at 12.3%. Now, one of the reasons why profitability is on the lower side is because company has recently invested in a new facility in US, acquired a new company. So all these investment would start showing result and its profitability is expected to increase further. Next, if you look at the debt to equity of the company, it has been on the higher side. Latest debt to equity is 0.91. Now, interestingly, company has borrowed around 6,000 crore rupees, out of which company has paid an interest of 160 crore last year. That effectively translates to a interest payment of 2.6%. The reason why Bharat Forge is paying such a low interest payment is because company has borrowed money from developed market at very low interest rate, and it is deploying this money in its business to generate more returns. And even if you look at 0.91, it is well under control. So next, finally, if you look at the reserves of the company, it has consistently grown and latest reserves is 6,476 crore. If you look at the shareholding pattern, now this is very interesting. Promoter shareholding has been more or less consistent in 12 quarters, about 46.25, and latest it is 45.25. Next, if you look at FIs, if you look at just compare it with 12 quarter ago, it was 19.18 and latest it is 18.82. However, FIs actually increased their shareholding in the company till your June 21 quarter, and then during the global sell-off, they started selling from Indian market also, and due to that, the shareholding reduced. However, DIs have captured this opportunity with both hands. If you see, their shareholding was just 12.13. So DI shareholding was 12.13 in June 21, and look at where it is today. It increased to 15.6, 20, 23.5, and latest it is 24. So DI's holding has literally doubled in last 4 quarters. And it is not just DIs have purchased when FIs have sold. Even the public shareholding has reduced from 17.16 to 11.44. And remember, if public is selling and either DIs or FIs or promoters are buying, then it shows the future of company is very bright. Now let us look at the share price movement of the company. So if you look at last 5 years of movement, Bharat Forge was trading at levels of 750, and then because of global sell-off in automobile sector, entire automobile sector saw a huge slowdown. Even Bharat Forge share price tanked nearly 50%, and of course COVID happened, so share tanked even further. However, post-COVID recovery, shares started gaining momentum and jumped to levels of nearly 850. But if you look at last 1 year of movement, there has been a consolidation phase in the company, although it touched a low of nearly 595, and since then the share is up 26%. But still at current levels, it is trading at 765, and the P ratio of the company is 32.67, which is looking pretty attractive. So overall, Bharat Forge is a fundamentally super strong company with very competent and experienced leadership. Being the #1 forging company in the world itself speaks about the quality of its business. Company has an experience of over 50 years in the industry with some of the top clients all over the world. And forging sector has a good entry barrier. It is not easy to overnight produce machine components. As far as future is concerned, the future of automobile is electric, and there is immense growth potential for Bharat Forge in this sector. Company has also launched its own electric two-wheeler with name Kratos. Moreover, company is also manufacturing components for EV segment. Then due to government focus on indigenization for defense and aerospace, it has opened a new world of opportunities for Bharat Forge in defense and aerospace segment. Company is also growing both organically and inorganically with acquisition. It has recently started a new manufacturing plant in US and has recently acquired JS Autocast for 490 crore rupees. That would help Bharat Forge expand its business in sectors like wind energy, hydraulics, construction, mining, etc. As far as financials are concerned, the revenue and profit growth was subdued in the past few years due to slowdown in auto sector. However, the auto sector is now recovering, and that would result in better growth for the company along with growth from industrial segment. And the way mutual fund houses are consistently accumulating the shares of Bharat Forge clearly suggests the future prospects are bright. Currently, Bharat Forge has a market cap of around 36,000 crore, that makes it a mid-cap company. It is trading at levels of 770 rupee and commands a P ratio of 33, which is looking reasonable. Screen the website is showing a P ratio of 37, which is incorrect. So overall, Bharat Forge is looking very interesting and can be considered as a part of your long-term portfolio. Although in the short term, there could be some more challenges due to uncertain economic environment, but any dip in this stock will only create buy opportunity. Now tell me, what is your take on this company and which stock would you like me to cover next? I hope you'll find this analysis useful. I'll see you in the next video. Till then, take care.